Welcome back to another Divorce at Altitude episode. My name is Amy Goscha, and I'm privileged to have Tina Parks with me today, who is a realtor in the metro area. Tina, how are you doing?
I am great. Thanks for having me on, and it's good to chat with you again.
Yeah, you too, Tina. Can you tell me just a little bit about your background, how you got into real estate, and what you're doing now?
You bet. Well, prior lifetime, I was in pharmaceutical medical sales and just did not find that as rewarding as I was hoping, and have just kind of fallen into real estate in terms of being an investor. Probably in 2004, I bought my first property here in Colorado, and it's been an amazing rental. And have just been involved in that capacity. I worked in title for some time, so I have a great background with the title side of things. Worked with a realtor for a few years as well, just while my kids were young, and wanted to keep myself involved in work. I'm just not wired to be a full-time stay-at-home mom, just not how I function. So, but just realized that at some point I wanted to have my license as well, just to be able to have that in my back pocket. Um, and recently have been really working more on the investment side with a lot of folks. I do more residential, but as an investor, I have a couple commercial properties that we own. But I've just always been on top of the real estate market. It just fascinates me. I think real estate's just one of those things that is ever changing, but in the long run, it always ends up being a great investment to have.
Yeah, and you have a lot of, besides your real estate experience, a lot of life experience. You're a mom. You also, for all the people listening who are, going through divorce, like you know what that's like too. You've been there at one point, so you really have
Yes.
a lot of, you know, a lot of experience, not only in real estate but just life experience.
Well, and I thank you. I appreciate that because I really do feel like, I remember my dad telling me that, you just don't get it when you're young. And it's so true. So I think you just kind of, the more you live, the more you know. Um, and I think, all of us that are a little bit older, I'm in my mid 40s, that, when you live and learn. And so I think that really is the best way to be able to provide, value to other folks.
Yeah, but you're also now happily married, for a long time, and so
Yeah,
for people.
we're coming up to 15 years here in a couple months, which is crazy. But yeah, I have been through a divorce. It's not fun. I wouldn't wish it on anybody, even when they're amicable. Um, but the good news is there is someone out there, So I was very fortunate in meeting my husband in a Mexican restaurant of all places. So it's a good story for another time.
Well, that's good. Like for people going through divorce, there is, I guess, light on the other side. So yeah, let's jump in kind of to, the market. It's been just kind of a crazy market in Colorado. What are you seeing right now as far as trends?
Oh man. Well, it's not just Colorado. That's the thing that's
Yeah,
nuts.
true.
It really is going on all over the place. But it's funny. A lot of people will ask, "They're like, God, you guys must be loving this right now as an agent." And truth be told, it's really not that fun. It's really difficult on both the sell side and the listing and the buy side. The market, as you probably have heard, is just literally bananas. The inventory is so low, and there's just still a frenzy of folks that are trying to find a place. It's really tough for
Yeah.
first-time home buyers, and it's just, I mean, it's not unusual to see things going for 10-20% over asking price.
Yeah, so I mean, I've seen on the news, and I don't know how recent, but fairly recent, where it's like multiple offers over list price. Is that happening? And I can see as an agent that's really hard, especially if you represent the buyer. It's like if they're putting multiple bids in and not getting it, that's probably very discouraging.
I think first off, it's setting the expectations from the outset. Really, I mean, I've had to have some difficult conversations with some folks where it went from, "Hey, I'm looking for this. I want, I'm hoping that it has white quartz countertops, XYZ at this price point," and then they realize that they have to really change the things that they're looking for to just be a player in the game. There have been, there's a couple companies that that I've worked with that have come up that are offering cash, they can make you a cash buyer. There's always like some stipulations that come along with that, or maybe a higher price point, or they are expecting you to do your loan with them. And so that's where they make their money, is through origination on their loans. So there are some creative ways to help folks become more cash buyers. But I think the biggest thing is setting folks' expectation of like, hey, listen, if you're looking at this price point, we might need to literally reduce your price by $100,000, knowing that you're going to be able to put an offer in and even compete. So yeah, I am seeing that on the buy side. On the listing side, it's awesome. I mean, it really is. I mean, I was looking at some stats from just Arapahoe in Denver County, and the average day on market is like 7 to 8 days. That's the average. It used to be 45 days was kind of the norm, 30 to 45 days. So for something, if it doesn't go under contract over the weekend, some folks are, really, it kind of creates this interesting psychological thing for buyers, because if something doesn't go under contract in the first weekend, then people wonder what's wrong. It's either overpriced or who knows. So it's, as an agent, I think when I'm working with folks that I'm listing for, that conversation of still like, hey, let's not get too over our skis. Let's not get too greedy. Let's really price it appropriate to the market, and the market will dictate where that goes. And I really feel like sometimes listing it a little bit below what you're seeing as comps really sets people up for getting usually more than what they want.
That's good. Yeah, that is good to know. I mean, as a divorce attorney, back in, let's call it 2007, 2008, when there was kind of the bank crashes, like I would joke with my colleagues about, people would say, I don't want to keep the house, or, because essentially the market crashed. And so
Yeah.
some people's property was like underwater, so it's like no one wanted to keep the house. But now we're in this market where everything is very high. So it's always a matter of like, can I actually afford to keep the house, or does it need to be listed for sale?
Well, and that's a great point. And I think I'm dealing with some friends of mine who are currently going through, unfortunately, a pretty contentious
Yeah.
divorce. And the difficulty is that you can give a broker price opinion, and if the divorce happens, let's say in 2 months down the road, it can completely change. I mean, the market has changed drastically in probably the last 2 months. We've seen anywhere from 6 to 12% per month increase in what things are going for. Now, granted, this is the hot time to sell, but I've been really following the market. I've been following quite a few YouTube videos and podcasts, listening to what people are predicting, and people are worried, hey, is this another bubble? And there's always a bubble. There's always this. It's just a matter of how high the bubble is versus how small that
Yeah.
bubble is. But we're not anything compared to where we were back in 2008, 2009. Different factors. You've got the Fed. The Fed has backed up a lot of the mortgage securities.
Yeah.
People have equity. They're not underwater. So I don't think you're going to see this bubble really bursting anytime soon. So, to your point with folks, it's kind of a fight of who keeps the house, whether they can afford it, which a lot of times, if they've been married for a long time, keeping the house probably makes a lot of sense. It's when it comes down to selling it, where are they going to go next?
Well, yeah, then that's a good point. Where are they going to go next? And so what I'm finding in my cases, I was just in mediation yesterday where the parties owned a property in Avon, and it was appraised for like 200,000 more than it was not even a year ago. And so now they're going to sell it, even though it's a property they'd like to keep, because it's hard for someone to buy the other person out. Um,
Yeah.
but that's okay, because that's like not a primary residence. But when it's a primary residence, like you're saying, where are they going to go? So are you seeing people sell their house now and like rent, or are you seeing that people are actually selling their houses and then buying another house?
Well, and again, it kind of depends on how much equity they have in their home, because if they've got quite a bit of equity and they're buying out their soon to be ex, a lot of times they still have enough to go ahead and find another property, have enough down payment. One of the tricks that I've found, and again, it's definitely a seller's market, that you can go up to a 60-day post occupancy agreement. And really, a lot of times people are so desperate to get into a home that people are doing post occupancy agreements for up to 2 months free of charge. Like they're willing to do that
Wow.
just to get into the property. I've dealt with it on the buy side and I've dealt with it on the listing side. So that's a tip or trick that you can use for folks who are like, hey, I need 30 to 60 days to just identify my next property. And so that's one of the things we're able to do on the listing side. Hopefully you can find, you can usually find something in 60 days. You just, it's just a tough market right now. I had another gal who was looking to buy back in like October, November, and she's like, hey, I want to wait until the market like maybe slows down in the spring. And I was like, hey, it may not, we never know. I highly doubt it will. And sure enough, I mean, she probably left about 50 grand on the table just by waiting. And I feel like it's almost the same now, that if you have to sell, in an unfortunate situation like a divorce, if you have to sell, luckily you've got the equity. Sometimes I've dealt with some folks that they have other properties that they've owned. And so they've decided to not have those be rentals anymore, like maybe splitting those assets and moving into one of those. But in terms of buying, the prediction in the Denver area is that things are still going to be appreciating anywhere from like, I think they say 6 to 10% in the next year. And that's probably being
Conservative?
conservative. And even then, I mean, if you buy now, you're still buying high, but I think it's still a good investment for folks. So if you could, it's just a matter of being able to get in, depending on where they are in that price point.
Yeah, I know in my own situation, because I moved from the mountains to Denver, I bought my house in the Denver area in October of 2020 and felt like I was buying at the top of the market, but my house has appreciated, a good, it hasn't been appraised, but a good 100 to 200,000 in such a short period of time. So
And
it's just,
you're in a great area too. I mean, I feel like that's not absurd. I mean, it's people are nervous. I remember people thinking that they bought high in 2014, 2015. Shoot, my husband and I laugh. There's no way we would afford our house now. I guess we would have been able to sell our old house high, but usually you want to, buy low, sell high,
right.
but you're selling high and then you're buying high. And I think again, we're still appreciating. The Denver market is really looking strong. The economy is doing well here. We still have numerous companies that are moving in to the Denver area because it's such a great place to live. That and the outskirts. I'm down in the suburbs of Denver, down in Centennial, and same thing. I mean, we're seeing in Arapahoe counties is kind of following the same lines as the Denver County is. So it's just a booming market still. I really don't feel like people are going to get underwater if they have to sell or if they want to sell.
Yeah, and then another thing we keep hearing on the news is about like low inventory. Is that still the case? Is the inventory low?
Yeah, inventory is at like record lows. And again, you kind of have a combination of this perfect storm where people, they're either happy in their homes, they don't want to move, or they're scared that, hey, where am I going to go next? Which it still is a great time to sell. There's still stuff out there. Inventory though is at an all-time low. It's not. It hasn't changed. And I'm looking at some numbers here from just the past few months. In real estate, we really look at like the month supply, like how many homes could we go until you run out in like a month, and we're literally sitting at like 0.5 as like an average, zero point 0.4 months of inventory, and that's extremely low in the real estate industry. I mean, 3 to 6 months is kind of the norm. So having 0.66 months is crazy.
Yeah. So that is, I mean, the market's crazy. So let's kind of talk about, like I have people come into my office and, they're looking at getting divorced, which is a major life change. The first thing they think about is, how do I get stability for my kids, for myself? And so one of the first things they look at is, should I stay in the house? Can I afford to stay in the house? What should I do with the house? So I look at all of those scenarios. And from the real estate side, I'm sure you meet with people sometimes who are going through divorce. from what do they ask you? Like, what types of questions are they asking you, um, when they're talking to you about signing a listing agreement to list the house for sale?
Well, I think first, and foremost, they really, as you probably know, they can't list it until the divorce is done. And so, like, if, for example, I am working with a client right now that they're in the middle of a divorce that they've been married for 44 plus years. And it's the house has become a major problem for them. Really trying to figure out what the house is worth, arguing about that. And so that's tough. I mean, I think for me, I always love to be able to help folks out with the listing. But in my opinion, if folks can stay in their home right now, and they are able to buy out their soon to be ex, I think that's a great scenario. A lot of times they can't do that, as I'm sure you see, where
Yeah.
the house is appreciated so much, even though they don't own anything on it. Let's say they own it outright, but a house gets appraised now. They bought it way back when for, $70,000, $80,000 in the mid 80s. And now the house is worth, upwards of 800 to $900,000. I mean, where does someone get that kind of cash?
Yeah, yeah, exactly. And you're talking specifically, Tina, about the circumstance where, parties don't agree to list the house for sale, like during the
Correct.
pending divorce, right? Yeah.
Yep. Yeah. Specifically there. If they agree, on the house, then great. I think they ask me first, and for me, I try to stay out as much of the litigious stuff as I can. I'm not an attorney.
Right.
I can give my best. I always recommend, hey, get an appraiser to come in and give you a true assessment of the house. Unfortunately, right now, I mean, there's huge appraisal gaps that are going on in the market. Um, I'm not sure, like, for example, let's say that somebody's house is on the market, just to keep numbers easy. Let's say that they listed it for 500,000 and it goes under contract for 690. And the appraiser comes, now it's kind of starting to level out a little bit where the comps are supporting that. But every now and then you still get a home where it doesn't appraise to the under contract price. And so folks are having to come and bring money to the table. And so again, that kind of, there's that gray area there now with folks who are getting divorced. They get an appraiser. Most appraisers, because of what happened in 2008, 2009, are pretty conservative. They're keeping up with the market, but it's tough because it's ever changing. And so what it appraised for, what it would have appraised for maybe 2 months ago, may be a different story. And so they're having to keep up with those comps, which is, again, kind of creating some contention then between folks of deciding what that house is really worth. And, kind of the running joke in real estate is what's a home worth? And it's whatever one person is willing to pay. And in this market right now, I mean, again, just a prime example, there was a home that I was trying to get some folks under contract for $1.5 million, and it went under contract for 1.86. And
Wow.
it probably had about 30 to 40 showings in the first couple of days.
Are you serious? Oh my
Yeah.
God.
And so
Crazy.
again, it's not every home, but if it shows well, and that's probably one thing I really recommend to the people that I list with, and one of the things I always offer is helping with staging. Um, if your house shows well, it always, people get really emotional about the home. You usually get top dollar, and so those are things that
Yeah.
I have a crew of some awesome gals that I work with that can come in and they can either work with what people currently have and can help kind of declutter. And they do it in a great way. They take that onus off of me so I don't sound like I'm telling someone that their baby is ugly, because, which it's not. It's just a matter of, like, no, they are experts in that field. And that's why I bring them in, because I know what I
Yeah.
like when I see it. But if you ask me to go in and declutter for somebody, I wouldn't know where to even start.
Yeah.
I won't show you the rest of my office, because then you would see how it looks. It's my organized chaos.
Yeah.
But I think, just having those resources of knowing, like, hey, I have some ladies that I love that I bring in, and they, I usually cover the first couple hours of their services. And then if they want to, if the folks who are listing want to have them come on for some longer or bigger project type stuff, then we always work through that.
Yeah. And actually, talking about decluttering, that's one thing as a divorce attorney sometimes I run into is, we negotiate these agreements that say, okay, the house is going to be listed for sale. one person's going to stay in the house and they have to get the house show ready. And sometimes people don't cooperate. So have you ever run into that before? And how do you handle that, or do you stay out of it and try to stay as neutral as possible?
I have to stay neutral. When it starts getting really contentious and that it just, you see it on your end, it just makes it difficult for everybody involved. Um, I try to kind of play that neutral ground, and because I have to be a neutral party in the
Yeah.
process. Otherwise, it just creates all sorts of angst. It's kind of like with the post occupancy agreement. I mean, you see those are kind of the norm right now.
And explain to people. I mean, most people I know what it
Sure.
is. For people that don't, just explain what that is.
So if someone's listing their home, for example, and we talked about it a little bit earlier, and they haven't yet identified their next home, they can specifically say, hey, we're looking at all offers, but if someone puts in a post, say, hey, if you put in that you'll do a 30 to 60 day post occupancy agreement, basically meaning that I can stay in the home for 30 to 60 days and basically rent it back. And there's a post occupancy agreement that we put together. So the people that are selling the property, you pick a close date, but and then they close it and sell it to the buyer. The buyer now technically is the owner, but the person who owned the home now can live in that house for 30 to 60 days. And used to be that if someone needed that, they'd negotiate the rent. But because of the market, most people are able to live in the house free of charge. Like that just is kind of one of the things that people are offering to sweeten the deal as the buyer to be able to win the listing. And so right now it's really is a seller's market, that folks that are needing to sell and they haven't identified their property, it kind of gives them some peace of mind to know, hey, we'll only take an offer that has a post occupancy agreement that says, hey, free of charge. I always recommend that people, when they're buying, they do like some sort of security deposit. But once we close, I'm not going to leave my folks high and dry. But I really, just from a litigious standpoint, I can't really get involved with how they handle all that. Really, I just usually recommend they talk to an attorney. Because there's just a fine line. Like, I'm one that likes to get in and help as much as I can, but we have to be really careful as an agent because we're not attorneys.
Yeah, exactly. So let's talk about just if the parties agree. Let's do the scenario where parties are going through a divorce. They agree to list the house for sale. They sign a listing agreement, right?
They'll sign a listing agreement.
Yeah, with you. What is the time frame like now? Like, it sounds like the house would go under the market, like under contract really quick, 7 to 8 days versus, the longer period of time. From the point that an offer is accepted, can you talk about what the process looks like to get to closing? Because it seems like appraisers are super busy right now. Like, what can someone expect for, like, what do you estimate for, like, the time frame from under contract to closing?
Well, and again, it's such a crazy seller's market right now that I wish I could tell you that there's kind of a norm. I'll tell you what the norm is pre-crazy market to where it is now. I mean, a normal closing is usually 30 days. That's if someone has a loan. It just gives enough time to get all their ducks in a row. A lot of sellers it depends on what the seller wants. Really, the seller can truly dictate what they want in an offer. And so right now, if someone's like, hey, we want to get this sold in 15 days, there are people that are out there that come in with cash offers that say we can close as quick as 10 to 14 days.
And are you seeing people I'm seeing some circumstances where people are even waiving the inspection objection.
So that's becoming the norm as well. Like, really, the norm right now, from what I have seen, is multiple offers on properties if it's priced right. People come in and they say, like on a contract, you'll see, and they've added something new where you've got an inspection objection, and then you've got an inspection termination deadline. And so, really, as you may know, that in any contract is very buyer friendly. So contract gives a buyer quite a few opportunities to back out of a contract
Right.
if they
Out of
choose.
it.
If there are lots of ways for them to get out of the contract. Now they have to operate in good faith. Like the intention is that they're going in to get under contract with the intent to buy. So, but there are numerous points in a contract, and I notice this when I'm writing an offer as well, that I have to be very mindful of how many places I'm putting in those dates to have someone be able to get out of that contract, because sellers don't want that to go out of contract. They want that contract to go from being
Right.
under contract to going to close. And so, for example, a lot of the buyers too right now are, I wouldn't say waiving inspection. I would say that would be not in anyone's best interest. Is I would say, if you're going to look at purchasing a property, knowing that it's a seller's market, a majorly weighted towards a seller's market,
Yeah.
go in there and say, hey, I will still do an inspection. I will not do an inspection objection, but I will, I have the right to an inspection. And if I find anything in there like major, like structural issues or
Mhm.
foundation issues, that the buyer still has the right to back out, and also gives the sellers then the right to come back and say, hey, I know we said that you weren't going to ask for any inspection items. However, hey, we didn't know that there were some major electrical or this or that anything that comes up in inspection that is a problem will have to be disclosed moving forward. So let's say that a buyer says, okay, I will do an inspection. I'm not going to ask for the smaller items. I'm not going to do an inspection objection, but they still find something big. Then that's where I can kind of come in and say, hey, listen, Susie Seller, and work with the agent and say, hey, we found some pretty major structural things. We can't, my clients do not want to buy it given that. So we're either going to back out, or we do need to negotiate something along
Yeah.
these lines. And I think it's just having that open communication with another agent. Those are the agents that are best to work with it. Even though in the contract it says, hey, we've waived our right, we're going to do an inspection, but we're not going to ask for things. I mean, I'll give you an example. Like back in 2012, when the market was still kind of just about to come up, my
Yeah.
husband and I, when we bought our house, I
Yeah.
mean, in hindsight, I'm laughing at some of the things that we asked the sellers to do. We asked them to clean the vents in the, above the gas range. I mean, if you ask someone to do that today, they'd laugh at you. I mean, I
Yeah.
hate to say it, but you just don't put the things in there that aren't major. If
Yeah.
they're, but major things, if those come up in inspection, people are probably still going to either back out, or they're going to have to negotiate with the seller. The seller's going to probably have to fix that, unless someone's totally desperate.
Yeah.
But
And
because if it
actually,
goes, yeah, sorry, if it goes back onto the market, then that has to be disclosed.
that's what I was going to ask you, is because that inspection, I would assume that that would have to now be disclosed because it's a known,
Yes.
I don't know what the right.
Legally, the seller is supposed to, if there's a new inspection that came in and they found there's major foundation or electrical or any kind of issue,
Yeah.
they have to disclose that then to the next person that comes along. And I
Right.
guarantee that will still be an issue with any other buyers.
Yeah. So in that kind of a circumstance, Tina, are you seeing where the sellers are working with the potential buyer to try to make, the concessions?
Yes, I think that that's where the negotiation comes in, where maybe they're not going to cover the full thing. They decide, like, hey, maybe we'll cover half. That's just where you come down to negotiation, and then really talking to the buyer about, hey, can you afford this? Do you have enough cash to come to work with this? Or there's ways you can do that with seller concessions. Um, there's all sorts of negotiation. The deal's not done when something like that happens. Um, but I do think that it does creates a more unique situation that makes it a little bit more difficult to get to closing. But I think sellers, if they are represented by a good agent, will know that, hey, we've got to, if we want this deal to go, we have to make sure that we're doing what we need to do on our end, and make sure that it's a safe home for someone.
Yeah. And then I'm guessing that another point of negotiation to try to get it to close is on, you mentioned the appraisal gap, and also lending, because isn't there an objection where you can object to like the loan,
The,
the
that
financing?
one's
What is that
yes.
called?
There is on the contract where it's basically a buyer can terminate the contract really at any point, saying they just don't like the terms of the loan. They don't have to explain why or what they don't like. They can just say, we don't like the terms of the loan. And so we're going to, which you're not seeing a whole lot of buyers at this point right now that are backing out. They're just happy they're getting under contract.
Yeah,
And so it's a lot more rare to see that happening. I think that's why you're also seeing people on the sell side, though, who are much more interested in seeing cash offers.
right.
And the tough thing is, I would really say that nowadays, anything that's like $500,000 or below, for like a first time home buyer, someone who's going in that doesn't have cash, they're competing with a lot of investors that are coming in and paying cash, or people that have the cash or find a way to make a cash offer.
Yeah,
So it's definitely tough in that price point.
yeah.
Um,
And talking about price points, and sometimes you see this, like, is there different trends depending on the price point right now in the market, or is it just all crazy and even though it's softened a little bit?
I would say that when you start, gosh, that's a great question, because I have seen, again, $1.5 million homes where there are multiple offers and it goes $360,000 over the asking price.
Yeah.
Um,
So it sounds
and
like
and
no. I mean, it's just
it,
crazy.
frankly, I mean, and it really was priced right. I went back and looked at the comps from the listing agent, and I thought he'd priced it accordingly. And again, you get to this position where maybe based on the inventory and what other people are seeing at $1.5 million, I thought, holy smokes, this house is, on a great lot in a great neighborhood. It's completely turnkey, can move in and not do anything. So it creates that frenzy. So I think you're still seeing some, um, quite a bit of competition, even in the $1 million plus considered quote unquote luxury market. When you start moving into the high, probably mid to high $1 million range, maybe not as much. But I would say anything under, that anything from four to $700,000, maybe 800, is
Yeah.
probably going to be, if it's priced well and it's a good property, it's going to be off the market in a matter of days.
Yeah. Another question I have is when you're writing an offer, at least on the divorce side, when we're trying to get houses appraised, like the appraisers are just backed up. It's just taking them a while to get appraisals done. Are you finding that like when you're, doing an offer, like are you taking into consideration that appraisals are taking longer to get done? Is that affecting really the real estate
Yes,
contract?
I a little. I think that, yes and no. It's a great question. I think when I write an offer, we always have the ability to do an amend and extend. And so when I write an offer, I want it to be as clean and crisp as possible. And I think the first thing I have to do is my job to go back to the listing agent and say, hey, what are your sellers really looking for? Like, what's, aside from price, what's a solid offer to them? Is it a post occupancy agreement? Is it a quick close? Is it cash? What do I need to know to help my buyers position themselves best to get under contract? And then we'll write it, kind of have a pretty, just, in the box idea of on a typical 30-day close. I kind of know how to backdate that from the closing date and can backdate that to where the appraisal will be. And I usually just still put that date in there just so that it doesn't create any confusion or maybe a red flag for
Yeah,
the sellers. And then just let them know, say, hey, listen, you guys know that appraisals are taking a little bit longer. I'm putting this date in just so that you know that we're serious about this. And if we have to cross that bridge when we get there and we can't get the appraisal done in time, are you guys going to be okay with an amend extend? And so we always have that ability to do that if we're not going to hit our dates. But for me, it's just making sure that we let the listing agent know that we're serious. And I think, again, just any good agent will pick up the phone and call the listing agent and have a conversation. Because at
yeah,
the end of the day, it's not us against, it's not the I'm not the seller's agent against the listing agent. We're partners in this, and we both want to see it get to closing.
yeah. When you're dealing with, a couple who, so it sounds like when you're listing a house for sale for someone who is getting divorced, is it a lot of times after the divorce has been finalized, or is it in the circumstance of when they're going through the divorce?
I think it's really, and I could probably turn that question on you. You know, it, for example, one of the clients I'm hopefully going to be working with, they might want to bring in a neutral third party. I don't know how that's going to pan out, but they can't list their house right now because they haven't been able to agree on, they haven't been able to really come to any kind of agreement on their divorce. And so I guess I could turn that on you and ask as well, like at what point can people sell when they've,
Yeah,
if, let's say that they're like, as long, I guess, as long as they're not arguing about what that purchase or the listing price will be, then
yeah.
I'm not sure where that kind of comes in on your end.
Yeah, so on my end, I mean, essentially, I mean, you have to agree to list, like the marital residence for sale, and we're going to enter, a stipulation regarding the terms. And normally, what we put in the stipulation is the parties agree to list X property for sale. They're going to hire X agent as the listing agent. They're going to sign the listing agreement within X amount of days. They might take the recommendations of the realtor regarding list price, list reduction. And a lot of times if there's disputes, we put in an arbitration provision to hire an arbitrator to essentially arbitrate those disputes, because that's frankly the last thing that a court wants to do.
Right.
And the courts are just, they're backlogged right now, with COVID and everything. It's just, trying to get something like that in front of a judge right away is, in the time frame where it needs to be, done. Because as you know, with real estate contracts, it's happening fast. Like, you have to, if a counter offer comes in, you have a deadline where you have to accept it or not,
Right.
and
And if you don't, and those deadlines pass, then the contract is null and void.
yeah, and in this kind of market, I mean, you're just never going to make any headway. So, we are very cognizant about those things, and it can be kind of complicated, um, because you have to kind of cover all those scenarios. But generally, the law is that unless you reach an agreement, if it's a marital property, you have to reach an agreement to list it for sale. And if you're fighting over whether or not it should be sold or not, then you have to have a judge essentially decide that, like who's keeping the
Yep.
property, or is it going to be listed, for sale. So
Yeah, and that's exactly what I've run into in this one particular instance where they just can't come to terms with anything, and so it's going to go to court, which that won't be probably till next month or the month after, depending on, I think they've got a court date set for September, and I don't know what the market's going to do. I mean, I've given them a comparative market analysis on their house in real time of what it is in a snapshot like today, but that can change tomorrow or 2 3 weeks. It could be completely different, and
right,
so it's a
yeah.
little bit of a gamble.
Yeah, I mean, I guess the other thing that's important from the, family lawyer perspective that people look at going through divorce, when they're looking at whether to stay in the house and buy the other spouse's interest out versus selling it, is that the law says that if you're going to buy the interest out, then you base that off of the fair market value of the house when figuring out the equity. But then when you go to list it for sale, usually both parties have to share in the cost of, the sale. So that is
Right.
another consideration, when you're going through divorce, looking at, like if you're going to keep the property, and then you sell it a few years down the road, you don't back out the cost of sale when figuring out what, the 50% equity portion is to the other spouse.
Yeah, I
So
mean, it
I get
creates
that question.
yeah.
Yeah, I get that question a lot. Like in representing, I guess, people and selling their houses or buyers who are divorcing, what are some common questions that you get? I guess maybe it's not just related to people getting divorced, but are there any specific questions that are, I guess, unique to parties getting divorced that you get asked?
Well, the hardest, you brought up a point with, fair market value. And again, it is it is such a tough thing as an agent to really give that opinion. And again, it is just an opinion. I mean, I can give my opinion of what I would, recommend, and my expert advice on what I would recommend someone list a property for, or how much they're, willing to put a bid on a property. But you just don't know how that's going to be changing in the next, couple days or weeks or months. It is changing every day. And, the hardest part is, you're seeing, it's pretty normal to see appraisal gaps. And so an appraiser might say, hey, I appraised the house at $500,000, but it might, fair market value, if it went to market, you might have a bidding war and it gets bid up to 680. And so that's really a tough conversation when people ask, like, hey, if I'm going to get it appraised, um, appraisers tend to be a little bit more conservative. I think they do a great job of giving their assessment of what it would appraise for.
Yeah.
But we're seeing a lot of appraisal gaps still, because the market continues. Like, for a long time, we were seeing a pretty big lag of the appraisal gaps because I think everyone was just so dumbfounded with how big of a frenzy the market was. And then it's kind of caught up now that we have more comps to compare to say, hey, this house actually sold for quite a bit more. And so now you've had these higher comps, but it's still changing. I mean, things are still continuing to appreciate, things are still selling high. So that's when people ask me, like, hey, if I don't, what is fair market value? That's a really difficult question to answer because
Yeah.
you really don't know until you list it.
Yeah. And I'm
We can get a ballpark, but we don't know.
and I've had and I've done this where I ask a realtor as a family law attorney, can you do a CMA, can you do a comparative market analysis? Because maybe the parties don't want to, maybe they have multiple properties and they don't necessarily want to get all these appraisals done just for mediation purposes.
Right.
Um, but that's probably even hard on the CMAs because you're looking at comps, but then, houses are selling overpriced, so I'm sure it's hard on even
Yeah.
CMAs.
It can be. I think, I guess if you say they're overpriced, that really tells you that's the new market. The new
Yeah.
market is really that things are kind of overpriced. And but that's, you look at like California, and things just kind of kept on going up, and that's just the reality of what the market is. Like, right now, this is the market. The market is kind of inflated, but it's also appreciating. And
Yeah.
so it's, I think the most difficult ones are the kind of one-off unique properties where you don't have a lot of comps to compare those to. And I tend to recommend that folks get more than just one competitive market analysis from an agent to see, hey, someone else might have a completely different opinion if they do their due diligence. That should be very close, because it's all done very calculated. It's not just oh, hey, that's a nice looking house, and this house, my gut tells me it's this. I mean, it's a pretty lengthy process that we go through to really get an accurate amount of what it would sell for. But again, it's such a fluid market right now. It's truly difficult to nail that down.
Yeah. I'm also thinking about, some questions I get as far as value. People will say, well, can we look at a tax assessment or,
No. I
yeah,
mean, no,
can you explain
no.
the issue with tax assessments and why that's not a fair depiction, just in general, of what value is?
Well, it's funny because when you're as a homeowner, and I get my tax assessment back, and it's risen, a certain amount, because based on what the market's doing, I always want to dispute that and be like, well, no way, it can't be, because your taxes
Yeah.
go up. But at the same time, if I'm looking at it through the lens of a buyer or seller, then I love seeing that it's gone up. But it's those assessor, they're usually very conservative,
And based on
and
like previous, I mean, aren't they based off of previous year's data
it is.
too?
They base it off of previous year's data. And again, I'm not a huge expert in this. I know that
Yeah.
they do it every 2 years. I think there's a certain percentage that they can actually go up every year. So it can't compete with what the market's doing. So no, I never, and people ask sometimes too, like, oh, what about Zillow and Zestimate? And Zestimate can be all over the board. I mean, you see, we have a rental property up in the Highlands that, um, it's been a great property to have over the last few years. But I look at the Zestimate and I know that the property's great, but I also am realistic and I think, wow, Zestimate says I could sell it for this, but I know that I couldn't sell it for that, or maybe I could in this market. I don't know, but
Yeah.
Zestimate's just one of those things. And I had a good buddy that worked for Zillow for some time, no longer is there, and just said, they do the best job they can, but a lot of that AI just isn't as accurate. It can't keep up with the speed of how things are changing. And
Yeah.
so sometimes it's really inflated and sometimes it's really undervalued, underpriced. So again, it really goes back to what would one person pay for a property? That's really
Yeah. And
what
also
something's worth.
talking about that AI, stuff. I mean, I've noticed and sometimes I'll look at the Zestimate or however you
Well,
say
it's
it.
fun. It's like Christmas.
Yeah, but I've noticed with properties that get listed for sale that the Z estimate goes up. Like it will go up just because a house is listed for a certain amount. So you
Right.
just can't look at that because it's such a moving target, I think.
Yeah, it's a great, it can give you like a good solid pseudo baseline. I usually think they're somewhat kind of on the mark, but it can range. I mean, sometimes they're over or underinflated by 100 grand. So I think it's good to get, a real person to come in and do like a competitive market analysis, that someone who knows the area and can pull the numbers and really give an accurate and be able to drive by and see the property. Because a lot of times, it doesn't take into consideration maybe what someone's done, on the inside of their home. Like I'm sure right now we did a remodel on our home, which was, I wouldn't recommend doing that during a pandemic, but we did our kitchen and we were without a kitchen for quite some time. But I'm sure, we did pull permits and, did what we needed to do, but I'm sure that has not been, updated yet on Say's estimate.
Yeah. Yeah,
You know, that, and
exactly.
they don't know what types of materials we did. They don't know what kind of appliances we put in. I mean, those are all things that can kind of change the value of your home.
Yeah. Well, I think kind of to wrap things up, I mean, the real estate market is definitely exciting right now.
It's unique. I'll say it that way. It is exciting. I think it's always exciting. It's just I get real geeked up with real estate and real estate arbitrage and just finding value. I mean, my big thing I'm teaching my kids is that no one's creating any more land.
Yeah.
So, they're not making any more of it. So I find it being just a great, it goes up and down, but if you can be in real estate and have some real estate, um, it always ends up to me in the long run being a good investment.
Yeah. And then we didn't really touch on this, but is there anything that you wanted to say as far as like the commercial real estate space right now?
Oh man. Yeah, I mean, when the pandemic first, hit, my husband, who's a very conservative and very pragmatic and has his head on his shoulders pretty good, he was really, really nervous about how that was going to impact us just with people closing down. I do, I'm not as privy on the commercial side. That's not really
Yeah.
where I
Your
do
expertise.
majority of my business, but just as an investor, I do stay privy to what's going on. There has been definitely a decrease in, folks that are renting, but I think a lot of the spaces where people are renting for, the essential workers like physicians and dentists and things like that. Those are great. The medical office buildings are great investments. Um, but there has been definitely a shift. I think even once the world opens back completely, if we can get through this Delta variant too,
Right.
I think that space is changing. Um, I think people love to go into an office and have the option to do so.
Yeah.
But I do think people also are really appreciating a new hybrid type where they can work from home and they can also work in the office, and people are
Right.
still showing that they're able to do so. So I think that the commercial industry will be changing. I think those that are pretty innovative are gonna, and commercial agents that are innovative are gonna find ways to continue to bring value to that. And at the end of the day, it's still land. I mean,
Right.
I think that it's an asset that, whether you just change the way that property is used, I think people are going to get creative and find ways to make it work for them.
Yeah. No, I appreciate that.
Yeah.
there's definitely people, clients I have that own commercial real estate and have those questions on the market and where things sit. So
What has been their have they been kind of more coming from a place of fear of like, oh gosh, I'm not sure where this is going to go, or have they been
it gets
more just
my
asking where the market's going?
Yeah, they're asking where the market's going, but also it's more of the circumstance where maybe they own a business and then they have like a holding company that holds maybe the building that their business is in or storage units, like that kind of stuff. And so it's more about like all of the money is in the business and the commercial real estate. So how do we actually, divide this up when one person really runs the business and maybe the other person doesn't? But you can't
Oh
just give
yeah.
the other person all the commercial real estate because it's so intertwined with the business. So, you don't want to leave one spouse with just, a note that's secured with assets from the business. So it just gets kind of complicated, on that piece. So that's kind of more where it sits. But the question does come up, if it's not just intertwined with the business, should we sell the commercial real estate? Should we hold it? Or should we just get it appraised, and then
Yeah, and
figure
that's
it out?
that's tough right now to how do you value, depending on what kind of commercial property it is, how does an appraiser come in and value that property?
Right,
Because if it's a medical office building, it may be a whole different animal than if you're dealing with a commercial space that say like, you know, maybe like where Google has their space and they probably own their own space, but you get some of these companies that maybe a lot of people they're still at 40% of capacity.
right.
So that's a whole nother animal. And it's intriguing to me. It's not, it's not my wheelhouse in particular. Um, it's interesting to me because I think that really does, a lot of people I think of a typical divorce. You're dealing with just your marital assets, but when you start getting into some high net worth clients, oftentimes, real estate
Yeah,
investments are part of their portfolio,
yeah,
and that
exactly.
that really does add a whole new
Layer.
layer to how you settle that out.
Yeah, exactly. And yeah, that stuff is fascinating to me too, when you kind of get that interplay, not just, can I stay in the marital residence, but we have investment properties and you get into the whole tax issue. Like when you transfer property, incident of a divorce, there's not a tax issue with that transfer, but you still have to look at, the basis within the property and,
Yeah,
like,
right. If you ever sell that, what are the capital gains going to be? Because
yeah,
that's going to be a liability. Whoever keeps the property, you have
yep.
to take that
So
into consideration because that's going to be a liability to them. Even with residential, I mean, there's once you get to I think, and I know it might be changing, but I think it's $500,000 in
on your
equity.
name, yeah.
Then and a lot of people have that right now, and so you
Yeah,
have to take in consideration that tax burden as well.
yeah.
There's
So
a
that's
lot of moving
another
parts. Yeah,
Yeah. So that's another complexity when you're looking at not only can I afford it, but what are the tax consequences, and does
right.
it actually make sense to sell the house when we're married so we get the 500,000 exemption versus, like down the road in a year when I'm single and you only get the 250,
Yeah,
so
exactly.
it's
Yeah,
just
so there's you have to take into consideration all those moving parts, and I think for me, when I'm working with folks, I I really want to make sure that they're working with a great attorney like you, where they have the resources for people to talk to them about that because I could offer my expertise from an agent's perspective, but um, I can't really give advice on the tax side of things, or I want to make sure they've got a great accountant, that they've got a great attorney. It's kind of a whole team that has to work together to help them
yeah.
make good decisions.
Yeah, and I mean, same thing with me, like with, having clients work with a good real estate agent, someone who is like really willing to talk to the other agent and has a good rapport to work through the contract, because it's like you want to see that sale come to fruition, whether or not you're the seller or the buyer, to get people moving forward. So that's super important.
Well, and I mean, I had this mindset for a really long time. I hesitated getting my license for years because the barrier to entry is not set at a huge high bar, and so you've can have a few really awful agents that ruin it for the rest that are really in it to be professional, and it's a full-time, we run it as a business. And, so I think, you just have to make sure you're working with people that, again, have a good reputation. Like for
Yep.
me, I always want to have that good rapport with the agent I'm working with, whether I'm on the listing side or I'm on the sales side, because you're working together. You're not working against each other. It's not an
Right.
ego thing. It's about, hey, what's going to be the best thing that we can do to get this to the closing table and have the deal go through without any complications.
Right. Yeah, that's super important. Well, Tina, thank you so much for your time today.
Yeah.
This was really a fun episode. For our listeners out there, can you tell them what your contact information is? Like if they, are looking for a realtor, what your email and what your phone number is, how can they
Oh,
get it? How can they get
absolutely.
in contact?
Absolutely. Yes. You can always reach me by my phone. My direct number is 720-232-4482. And my email is Tina, Tina, dot Parks, Parks, at coloradohomes.com. So just full coloradohomes.com, Tina.Parks at coloradohomes.com.
Well, thank you so much, Tina. We really appreciate you coming on today and giving us an update as to where the market sits. So thank you for that, and I look forward to catching up with you soon.
I know. Well, thanks for having me. I get I really enjoy talking about this stuff. It's exciting for me, and I really appreciate you having me. So thanks.